It's a good question, because I would tell people different answers. I would say bootstrapped for a year, and then I would say raising money now. But to be honest, we've been raising money from day one, I think. So whether it be from friends and family or close associates, our network, and then angel investors, we've been constantly selling ourselves to different people. So I think the journey does start a lot earlier than you think it does. But I would say having the right sort of structuring, targeting is very vital, and ensuring what who you need to approach, and so you're not wasting time on leads that aren't gonna, even look at you. VC funding is very hard to get, and it's also not right for every business. So you definitely need to spend some time with your funding team working out what kind of funding you need to unlock the next stage. And I would recommend, if possible, build as much as you can, or at least get as much customer involvement as possible. People always tell me build the product for the customer, not for the investor. And I can say we've definitely done the wrong thing there. We've built a product which looks great for investors, but ultimately it's where the customers actually like it and they can use it. So that's the most vital thing, I think. And I'm supporting another business as well, actually a close friend of mine who's starting a business in the space, really pushing them to sort of, before they even look at investment, having a real solid sit down to what is actually the objectives of this business. What do you want it to be? Is it going to be, a unicorn, or is it going to be a £100 million business? And ensuring that, the funding they target and the sources to market they target are aligned with that. Because I've definitely gone down the route of trying to talk to everyone, and it's impossible. So that's probably part of the time issue, but it's definitely one of the recommendations I would definitely give to anyone in my old Rob a couple of years ago.
I would say this applies to not just pre-seed to seed, but over time, from every funding round to the next one, it gets much more complicated, and the time it takes to actually raise the round increases every single time. And I hear from many founders that when they are raising, the first phrase they say is always, we are moving fast. But the problem is, you're trying to move fast, but you're not actually moving fast. You're moving really slow. And this is something you will always experience. Even our pre-seed round lasted 6 months instead of 4 months. So it was 2 months longer than we expected. Reason being, obviously, you can't see everything coming. And not just you, but also the VCs and the investors, and all of those have special requirements. They also don't have time every single minute just for you. So it's a back and forth, and to make everything right, it just takes time. And obviously, the more money there is involved, the higher the things that need to be done really, really well. So, for example, the due diligence in our pre-seed round was a couple of weeks of work, especially with CrowdCube. They asked us a bunch of questions. We followed up with proof or whatever they wanted to hear, and this was it. But I know from other startups that due diligence can take months, just to make sure that all the information you give to the investor is actually correct and valid. It can also be faster. It also obviously depends on you, but this is a big chunk of work before you can actually raise the round. And even if you go into this direction, making sure that all your terms are right is also a main part here.
A bit of advice I've received when it comes to fundraising is that investors don't want to meet with you. They don't want to speak with you. They want to hear about you and then get in touch. We've tried some cold approaches. It certainly does have its moments, but really you're looking for warm introductions and notably getting your name out there, being bold, audacious in the market, really championing your solution and your vision. And that is what the VCs are looking for. And there's three main features when it comes to startup companies that determine success. That's vision, solution, and timing, or execution and timing. And being able to making sure that you have the right team is critical. You can have a great solution, or you can have the right timing, but without the appropriate human capital and without the appropriate timing and strategy and vision, all these things are essential. But I think really it's having the vision and having the people who are there to help you through that is the best advice I can provide. Finally, the thing you must do is present your fundraising as a series of discrete experiments with milestones. So what are you looking to get out of each element? What are your goals, objectives? Having clarity in your conceptual roadmap to be able to then express this to investors and so they get them excited about jumping on board.
At one point we understood that the goals were set up. We went straight away to venture capitals, which I think was the mistake for us, but you learn from mistake, right? We're all doing the startups from scratch, so we need to understand everything, how it works. And we understood that it was wrong decision, because in the stage where you have no even MVP and you have everything on the paper, okay, doing something already, like submitting the license and so on, but still, it's still idea. There's no revenue, there is no product, and venture capital will never invest in such of the product if you are building something unique and you spend a lot of money and time already on your IT, which was not the case for us. So, and at one point we were like, okay, so we're almost finished with all our money now, and we need to get the investment. And we were like, okay, so venture capital, forget about venture capital for now. We go and do the friends and family round. And we didn't involve family, I would say, but we involved like our professional friends. So we actually knocked the door of every person we knew from City, saying like, guys, we have that brilliant idea, you know us, how we deliver the stuff, because a lot of them were like my previous clients or my previous employee, the core workers. And we actually were successful. So we managed to close the first round in a week time. So actually it was like half an hour conversation with each of them, and they were like, okay, I'm plugging in 5K, 10K, 15K, whatever, just take it, you know. It's just, and it was great. I was like, okay, that was easy. Good that we did understand that, because we still could sit and wait for venture capital to come to us.